Hello and welcome to the Takeaways podcast. On today's episode, I'm with Karabo Makete, investment principal at Aions Venture Partners. On today's episode, we'll be talking about the recently launched 100 million rand fund through which Aions will be backing early stage startups in South Africa. Hi Karabo, good morning and welcome to the podcast. How's Joburg?
I'm good, thanks. How are you doing? Joburg is freezing today.
Yeah, I can definitely tell. So just share a bit more on the fund and what kind of startups you are going to be trying to back.
Okay, so the fund is specifically targeted towards startups that are post-revenue, tech-enabled, and are from South Africa. We're looking for high potential startups that have a pathway towards globalization, possibly, and we want startups that solve real South African and African problems through their solutions.
How much are you looking to get, like in terms of the equity, and what kind of stage of startups are you going to be trying to back? Like, are you going to look at startups which already have like a little bit of the revenue, or?
So you need to be in the tech space. So you need to be developing some sort of tech solution. But within the tech space, we're quite sector agnostic. So we look at everything from sort of climate, fintech, basically everything under the tech spectrum. We do look at startups that are already generating some sort of revenue and are working towards gearing up to scale so that they can in future be able to raise like a Series A, for example. So you need to be in the seed stage, but generating revenue. We also, so we don't necessarily look at startups that are still at sort of conceptualization phase that haven't gained any traction at all. So with regards to the equity, I can't give you a straight answer because, we work on the stage of the startup, how much revenue they're currently generating. The valuations differ from startup to startup. So the percentage ranges, but I can give you what the quantum of the ticket size is. So we give funding between 5 to 7 million rands per startup.
Then, like in terms of the life of the fund, right? Like, how long are you going to be like investing, and how long can the startups apply to be like a part of the fund?
So the fund that we've received currently from SSME and TIA has a lifespan of 10 years, but we are only able to deploy up until the 5th year. So from now, 5 years down the line, that's how long everyone has to sort of apply and for us to consider them. Obviously, it doesn't mean that in 5 years' time, we'll still have funds to deploy. They might go faster than anticipated. But yeah, we won't be able to make any other investments after 5 years, and we'd have to wait for our return thereon. And in terms of the startups themselves, Aions plans to be part of the journey for a maximum of 5 years, and then we'd like to start seeing ourselves exit from that and be able to make way for the Series A investors.
Before I jump over like to the LPs, right? I want to get your view on this, right? Obviously, over the last 10 years or so, the like amount of the venture capital that has come like into the continent has been a lot, right? At the early stage, why do you think there has not been like a particular, like amount of capital coming in, and what role do you expect this fund to play in kind of trying to plug that gap in South Africa?
Let me answer first the question of why do I believe that this stage of funding or this stage of the startup ecosystem is heavily underfunded. It's because I think the reality is that many startups are too advanced for grants, right? So there's a lot of funding on the grant stage where you haven't generated any revenue, you're starting out, you're conceptualizing, you've got an MVP, then there are quite a few options where you can get grant funding. But you can only apply for those up to like a certain number of times. Then you become too overqualified for them. But at that stage, you're still not mature enough for traditional venture capital. You can't jump from grant funding to Series A funding. You need that little 3-4 years or 5 years rather of seed stage funding, which is where I think in South Africa we fall short. It's very hard to get funding in that stage of a startup's journey because most investors want already proven revenue. They want predictable growth. They want like strong governance structures in place. And the reality is that in most instances, founders need capital before they've reached that point. And no one is willing to give that at this stage of the game. and it creates a funding, we call it a funding valley, where there are many promising businesses that are starting to gain traction, starting to work towards sustainability, but need funding in order to be able to scale and get themselves to a point where they are attractive to Series A investors. And the demand for funding at that outweighs the amount of funding that is given.
It's more like a chicken and egg problem in that for a startup to be able to be like attractive to investors, right? Like it has to have been able to grow like and generate the revenue, right? But to be able to get to that point also, you need to have been like able to have the access to the funding, right?
Yes.
If you look at the landscape like in South Africa, right, and it's not like an early stage problem only. I mean, like like in terms of the funding environment, right, like a majority of the funders of color don't have like the access to funding, right? How would like a fund like this kind of like be able to contribute towards that like ability for these particular class of the funders to be able to have the access to funding to grow their businesses?
So this fund particularly, our mandate is not restrictive on the impact matrix, but us as Aions, that's very close to our hearts. So we do try and see where we can have an impact on previously disadvantaged people or founders who wouldn't in any other instance have access to such funds. You get sometimes where you'll get a business that is applying and they've got like a stable business and the commercials are sort of making sense. But if they were to go seek funding elsewhere, they'd most probably get it because of the connections or the networks that they've got. And then we contrast that to someone who doesn't have any other option, who this is most probably their only way in which they could get funding. They don't have the networks with the high net worth individuals. They don't have the ins with the corporates in order to get the supply chains plugged in accordingly. So we do take that into consideration. However, it doesn't mean that just because a company is Black owned or Black women owned, it's going to get preference over a company that makes commercial sense. We need a balance of the both. And it rests with, it's very close to our heart for us to be able to empower people who in previous times have not been able to have such opportunities.
So the TIA, like is a part of the fund. Can you share more on, what role they played in the fund and are going to play, like in the life of the fund?
So the Technology Innovation Agency is, let me start maybe from where the fund came from. It came from SASME, which pulled funds from liquidity providers such as E-Squared and Technology Innovation Agency. The fund was a 360 million rand fund, and then that got divided up, given to different fund managers. We were awarded 60 million from SASME, and then TIA then came in and further invested an additional 40 million into the fund, bringing us to 100 million. It's been really good to have that sort of reaffirmation from TIA. Hopefully they'll be trailblazing a road for other entities to follow and be able to see that this fund or this space of funding is actually something that can be lucrative. A lot of funders and liquidity providers see the seed stage as a very risky part of funding. No one really wants to play in that space. So we're using this fund as a proof of concept, basically. If we get this right, when we get this right, we are hoping that it's going to invite all the other liquidity providers, pension fund managers, for example, to be able to play in this space that so desperately needs the funding in order to be able to grow our ecosystem and get us to a stage where we can say we are investor attractive. We've got startups that are investor ready, Series A, Series B ready, and VCs can flock to South Africa and Africa to get good, well-established startups.
I want to get your view on this, right? Obviously you are quite like a professional in this space. You deal with like startups every single day, like of your work, right? What would you say are the gaps that are preventing, like startups, to be able to scale from, the seed stage to like, like your Series A, et cetera, What's those like, core kind of like the factors that are preventing this growth like in South Africa?
All right. I don't think there's much of a challenge with getting from a Series A to an exit. I think the issue is where the startups are much smaller, which is the space that Aions plays in, right? And the challenges that we've seen there is that, first of all, funding. You can have the best product, you can have your product market fit, you can have traction already, but as soon as you get that one big deal or one big contract and you don't have the runway to be able to execute on that, you're basically strangled as a startup, and you need funding to to be able to perfect your product market fit, you need funding. If you need to do 1 or 2 pivots, you need funding that is going to get you to a point where you can become sustainable. Once you're sustainable, once you've got traction, and you've got a repeatable revenue that comes in every month that's steady, you then become much more attractive to Series A funders, who then have bigger checks, and are here to scale and, grow the company exponentially. So I think the part where we need funding, particularly to stabilize the startups, is where it's very important. And it's not just funding, right? The funding part is very important, of course. It can make or break the company. But at that stage, the companies are still very young. They're still very not mature, in lack of a better word. They need a lot of guidance, and which is why we don't just sort of write a check and then let you run off on your own at Aions. We do a lot of sort of hand-holding with the companies. We offer strategic support. We offer shared services. We offer opportunities into supply chain networks that we have built within the startup ecosystem to give a more holistic approach to, really embedding the startup within the ecosystem. Money alone is important, but it's not enough for a startup.
In terms of the pitch decks, right? Say you evaluating, a pitch deck for a particular startup. Which one of the factors are you going to kind of try to focus on the most? Is it more on the team or on the market or on the product?
It's a bit of all three, right? But we like to think that, bright ideas come about very often. You might have a really good idea, but you're probably not the first person to think of that idea. Someone has thought of it before. So the idea, yes, it's important, but it's not the foundation block of the pyramid that we're looking at. We want to look at the team, whether they have the ability to execute on that idea, whether they have the discipline to be coachable and be able to learn and pivot when the market is not responding in a way that we need it to. The market, of course, is also very important. You don't want to try and offer something that is already in a very saturated market without having a good enough competitive advantage over your other competitors within that space. So it's a combination of all three, but the product or the idea is probably the least important aspect that we look at out of these three. The first one would be the founders. I want to see the founding team, the execution team. Do they have the skills? If they don't have the skills, are they open to getting new skills into the team to ensure that they're able to execute on that? It's a challenge that we've faced quite a bit, and I think not just us, but a lot of people who've worked with startups. The founders tend to get very married to their idea. I want my product like this. I spent 7 years or 5 years developing this, and this is how it needs to play out. And then they take it to market and we don't get the response that is needed. And we come in with our strategic input, like, okay, let's pivot a little bit. Let's change this, let's change that. And, it becomes such a challenge if you're working with a founder who's too married to the idea that they cannot see what changes need to be made in the offering to ensure that we're still achieving the intended goal at the end of the day.
You brush up an important point in that I think a lot of the funders, don't really kind of get an idea of how the VC model works, right? In that if you back a startup as a VC, you are kind of hoping that they are going to grow quite a lot, right? So can you share more on, what you think makes a VC backable startup, just for funders to have a clear idea of what's going to be expected of them once they're a part of the fund, if they manage to get the backing?
Oh, okay. So after the funding.
Yeah, of course.
After the money is in the bank. Okay. Yeah. So as I said, the important part for us is, working with founders that know the problem that they're trying to solve and are not too married to their one path of solving that problem. So once we invest money into a startup, we evaluate it, right? We're going to do a sort of an MRI check of the startup, try and understand the business, how it works, its business model, where we see inefficiencies, where we can grow, where we can scale. So as a funder, I come in bringing in money, expecting to 2x, 3x the company so that I can get my desired output from the funds that I've given. That means that I'm going to give strategic input. It means that I'm going to put in milestones that we need to reach by a certain timeline so that I can exit when I have envisioned to, and so that we can be attractive to people or funders that I'm going to have to exit to, because it will most probably not be the founders themselves. In this stage, we usually exit to bigger VCs that are now looking at sort of Series A and trying to scale the business further. So we're going to give strategic input. We are going to improve the governance of the company. in the stage that we work in, the companies are very small, as I said. So you get the COO, or the CEO, sorry, playing COO role, playing CTO role, playing all different roles. And then there's no proper sort of decision-making levels and channels that are followed. So we put things like that in order to ensure that by the time that we reach the 5 years that we need to exit, your company has good governance, you've got a good track record, you've got your product market fit, and you can show another investor what their return on investment is going to be if they're to give you a certain amount of money into your company. So I think, yeah, as I said, working with founders is very challenging. So the one thing that founders don't always expect, which is confusing, is for us to have input into the company and want to steer the company in a specific direction. I'm not throwing the fund's money into a piggy bank and then coming to see what's happening after 5 years. I'm going to be actively involved in the decision-making processes, in the direction that the company is going to take, and the different types of markets or market sub-segments that we need to enter to ensure that we're able to scale at the anticipated growth that we came to when we were doing an evaluation of the application to start off.
Another thing that I'm interested in, right? Of all the sectors that obviously it's agnostic, but of all the sectors that the fund will be accepting the applications on, which top two are you most excited about?
Me personally, I'm excited about energy. I'm excited about energy, and the solutions that are coming from our entrepreneurial space are very, very exciting. Very intelligent people who spent lots of years in perfecting their offering. And I think it's a very big issue that, we really need to solve in South Africa. There's also climate, but I'm not necessarily that excited about climate. However, it is a subsector that will, at the end of the day, affect manufacturing. It'll affect energy, it'll affect water, it'll affect all these other different aspects. So yeah, I'd say energy and maybe climate, but my first one would definitely be energy.
Yeah, so no excitement on AI, because that's all the hype at the moment, isn't it?
I mean, we've been hearing about AI and how great it is and how it's going to take everyone's jobs, and then it ends up being too expensive, to replace the actual human. And AI is good to do mundane things, but there's always a level of human interaction that is needed to be paired with AI. It's a very powerful tool, I think, but it can be very dangerous if it's not monitored correctly and if it's not given the right information. So yeah, I don't mind AI, but I think in today's day and age, everyone likes sprinkling AI on top of everything, and then they think they've got a multi-billion-dollar company. Whereas, it doesn't work like that. You need actual work beneath the AI. And I think AI I don't see it as a sector on its own. So within the energy sector, there's definitely going to be layers of AI that is going to be able to interpret the data, give us some sort of intelligence. So it's across the board. I don't think it's a standalone sector on its own.
Which are the most common mistakes that the founders do when trying to pitch investors for their startups at seed stage, and how can they try to address those particular kind of challenges?
One thing that I always see is that a founder will see an opportunity for funding, and then they won't sort of look at all the requirements or the stage at which your business needs to be in order for you to qualify for this funding as a start, right? So a person will come with sort of a concept where we've stated, or where it has been stated that, this is a manufacturing fund, particularly looking at, companies that are doing this type of revenue. The second mistake that I think a lot of founders make, I think it is to overestimate their ability to penetrate a market without a proper strategy, right? And, really overstating the addressable market, or the obtainable market rather, that they're able to obtain, take into consideration the competitors, take into consideration the time it'll get to those conversion cycles, sometimes take much longer than founders think. Founders might think, we can land Coca-Cola in the next 5 months, whereas their sales cycles are like a year or 2 years long. And you really need to understand your market in order to know how quickly you can start generating revenue. And in a lot of instances, I advise founders to try and engage with their intended clients, try and understand them a bit better, to understand their sales cycles, understand in which direction they're going. And if possible, if they are able to show some sort of engagement with potential clients. That, as funders, gives us more. It gives us a comfort to say, okay, they have engaged with the client. They actually, some of these projections that they are projecting could be reached. We don't want projections where you're currently generating R0 and then in the next month you're going to make 2 million. And then when we ask where this 2 million is going to come from, you're like, yeah, from the market. And, you don't necessarily have a straightforward answer. So if you go a level deeper, 2 levels deeper, we try and interact with these potential clients. You try and understand how long their sales cycles are and if they'd be interested, how big their budget is. Then that sort of trims down your projections from being a guess to being like an estimated projection that we can work with.
Whilst we still on the topic of the market, right, would you show more of appreciation to businesses which have more of a B2B kind of a model or more of a B2C, right? Which one are you going to show, a preference to in terms of startups? Yeah,
I wouldn't say preference, because then I'd be sidelining a whole bunch of startups, which I don't think is great. I do, however, think that at startup stage, acquiring a customer, especially if you're B2C, is very expensive. You need to do a lot of marketing. You need to make sure you've got the right audience, and your audience needs to be quite large in order for you to see a proper sort of margin from the revenue that you're making, right? Your volumes need to be very high if you are B2C. This is, in most cases, it's a generalization. But when it comes to B2B, it's much easier, I think, to get those clients to get in the right room or to get the right person who can approve or disapprove a deal that you're trying to do. Your cost of acquiring a client is not going to be as expensive as doing the full-scale marketing, trying to ensure that you're reaching hundreds and thousands of people, whereas you can trim it down to a very slim pipeline where you can try and engage with people who might have access to those rooms or access to those events where you can meet those people.
You stated that in terms of the exit, you are going to look to be able to exit in 5 years post your investment period, right? In terms of the exits, are you looking at more of secondaries, or are you kind of growing these businesses to eventually be acquired?
So I think it'll be more of a mixture of both, right? We're hoping to, by the time that we want to exit in 5 years, that those companies are Series A ready and that other investors can come in and we can sell our stake to them. If a business were to be acquired, that's even better. I don't think that there's a specific way in which we would or a specific group of funders that we would like to exit to. We just like to get the companies to stabilize and be ready for growth and expansion that comes with preferably Series A funders.
As we conclude our conversation, right, if you look at the market, in South Africa at the moment, I mean, there's a lot of exciting startups. How do you see it evolving over the next 3 to 5 years? And what kind of opportunities do you think the founders can try to explore that are not, in their face at the moment?
So how I see it evolving is, I think the startup ecosystem as a whole it used to operate in silos that were very, very far apart from each other. And now it's, working towards becoming a bit more cohesive, where we are including different stakeholders, our funders, we're including our incubators, we're including our ESD funds, we're including grant funding, we're including, people who help with operationalization or ensuring that compliance and governance is all intact, plugging into supply chains. I think that is becoming more cohesive. I see it growing into an actual ecosystem in the next few years. Ourselves and a bunch of other stakeholders are actively working to, not operate in silos and have our sort of, this is us Aions and this is what we do, and we're not sort of sharing any information, any opportunities. We're very much open to sharing opportunities, collaborating with different incubators, with different funders, to ensure that there is a cohesive approach to assisting startups within the South African landscape.
Just a follow-up question on that. How do you intend to source deal flow, right? Are you just going to relying on the applications, or are you going to look to partner with accelerators and the incubators to see if there's startups there that can meet your mandate?
So we already have, I wouldn't call them partnerships, but it's a working relationship that we have with incubators, with other funders, with other fund managers, where we share pipeline. So if we're, as Aions, unable to go in on a specific deal, we don't hoard that deal for ourselves. We share it with other funders because we're trying to work to the benefit of the company, the startup, right? So if we can't fund, we try and pass the application elsewhere to see if there's anyone else who has appetite for that type of transaction. And the same happens to us with other funders, with other incubators. And with other stakeholder relationships that we have within the sector. We have done quite a bit of PR on our fund, which has generated a lot of applications that we need to sift through. So yeah, I think also, working with entities like TIA, they have access to quite a great pipeline as well. So we're able to see if we are able to get some of their pipeline into our fund. I don't think we're going to struggle with that. In actual fact, it might be more than we had anticipated in the beginning, but that's always good. And if we can't assist, we are very open to trying to assist in other ways, or trying to get other funders to see if they've got an appetite in some of the deals that we will be coming into contact with.
I think it's great work that you and the team are doing, and I wish you guys all the best, in the course of the fund.
Thank you so much. Thanks, Ephraim.
Okay, really appreciate your time so much, Karabo.
Thank you. You too. Have a good one.